A lot of people are completely misunderstanding what is really happening with XRP's price right now. And this confusion is creating fear, false expectations, and in some cases, very unrealistic predictions that do not match how the market actually works. Before you believe any extreme claim, it is important to slow down and look at the bigger picture because price movements in crypto are not random magic. They are driven by clear forces like market liquidity, investor behavior, regulation news, and overall global financial conditions. And when you understand these factors properly, the noise around XRP starts to make a lot more sense. When people talk about XRP price, most of the time they focus only on hype cycles or viral social media claims, but they ignore the deeper structure of how this asset actually moves in the market. XRP is not just a random, token that jumps because of excitement. It is part of a broader financial ecosystem where banks, payment systems, and institutional interests play a role in shaping long term sentiment. This means short term price emotions often look very different from the long term direction. And this difference is where most people get confused and end up thinking everyone else is wrong about XRP. Right now, one of the biggest misunderstandings is the idea that XRP must either explode instantly or fail completely. But the reality is much more slow and structured. Markets do not move in straight lines. And XRP has always shown long periods of sideways movement, followed by sudden spikes when conditions align. These conditions are usually not just one single event, but a combination of regulatory clarity, market liquidity expansion, and renewed investor confidence, which takes time to build. So, when people argue aggressively about extremely high or extremely low price targets, they are usually ignoring how gradual these processes really are. Another important point that most people miss is how sentiment controls, short-term price behavior. When XRP is trending online, people assume something major is happening behind the scenes, but in many cases, it is just emotional trading behavior repeating itself. Fear pushes people to sell early, and excitement pushes people to buy late. And both of these reactions create price swings that look dramatic but do not always represent real fundamental change. This is why understanding market psychology is just as important as understanding technical analysis when it comes to XRP. At the same time, it is also incorrect to dismiss XRP completely because there are real developments that continue to shape its position in the crypto space. Its use case in cross border payments and its ongoing discussions around regulatory clarity have kept it relevant even during uncertain market phases. However, relevance does not automatically mean immediate price explosion. And this is where expectations often become disconnected from reality. Many people assume that good news must instantly reflect in price, but in financial markets, timing is often delayed and sometimes priced in long before the public realizes it. What makes the situation even more confusing is the constant comparison of XRP with other major cryptocurrencies. People often try to measure XRP using the same lens as Bitcoin or Ethereum, but each asset has different drivers and different market behavior patterns. Bitcoin is heavily influenced by macro liquidity cycles. Ethereum is driven by ecosystem development, and XRP sits somewhere in a hybrid position influenced by both utility narratives and regulatory clarity. Because of this mixed identity, its price movement does not always follow the same logic as other coins, which leads many observers to incorrectly assume the market is inconsistent or irrational. As we go deeper into this analysis, it becomes clear that the real issue is not that everyone is wrong about XRP, but that most people are only seeing a small piece of the full picture. Some focus only on hype, some focus only on fear, and others focus only on long term potential without considering short term reality. The truth usually sits in between these extreme viewpoints, and understanding that balance is the key to making sense of XRP's actual price behavior. In continuation of the discussion, one of the biggest reasons XRP price confusion spreads so fast is because social media has completely changed how people interpret financial information. Instead of relying on structured analysis or long term data, many traders and viewers now react to short clips, screenshots, and bold claims that are designed more to attract attention than to explain reality. This creates a cycle where emotional reactions become stronger than factual understanding, and over time it builds a distorted picture of what is actually happening in the market. A major issue is the way price predictions are shared without context. When someone claims a very high or very low XRP target, most of the time, they do not explain the assumptions behind that prediction. They do not mention market conditions, liquidity requirements, regulatory outcomes, or adoption speed. Without these details, predictions become just numbers that circulate online without meaning. This leads many people to believe that price targets are guaranteed outcomes, when in reality, they are only scenarios based on certain conditions that may or may not happen. Another layer of confusion comes from how fast information spreads in crypto communities. A single rumor or speculative statement can travel across platforms within minutes. And by the time it reaches a larger audience, it often gets amplified and reshaped. Each repetition tends to add more confidence and less caution until the original uncertainty is completely lost. This is why XRP discussions often feel extremely divided, because different groups are reacting to different versions of the same information, not the original source. At the same time, there is also a strong tendency for people to rely heavily on short term price movement as proof of long term direction. When XRP moves up quickly, some assume a major breakout has started, and when it drops, others assume failure or weakness. However, short term volatility in crypto is not a reliable indicator of long term trend. These movements are often influenced by liquidity shifts, trading activity, and broader market sentiment rather than fundamental change in the asset itself. Understanding this difference is essential to avoid misinterpreting normal market behavior as something more significant. Professional market analysis usually focuses on a combination of indicators rather than a single signal. These include trading volume trends, market structure, historical resistance and support levels, macroeconomic conditions, and regulatory developments. When these factors are studied together, a more balanced picture emerges showing that XRP does not move based on hype alone, but also does not move in isolation from the wider financial environment. Unfortunately, most public discussions only focus on one or two of these elements, which leads to incomplete conclusions. Another important factor that often gets ignored is the role of long term holders compared to short term traders. Long term holders usually base their decisions on broader adoption expectations and macro trends, while short term traders react to immediate price changes. When these two groups interact in the same market, it creates constant tension between patience and urgency. This tension is reflected in XRP's price behavior, where periods of calm accumulation are often followed by sharp emotional reactions from short term participants. It is also important to understand that market cycles take time to develop. In crypto, major movements rarely happen instantly without buildup. Instead, they form through stages of accumulation, expansion, distribution, and correction. XRP has historically shown, similar behavior patterns where long consolidation phases are followed by sudden expansion when external conditions align. However, because the accumulation phase feels slow and unexciting, many participants lose patience and assume nothing is happening, even though structural positioning may still be forming underneath the surface. This misunderstanding becomes even stronger when people expect immediate responses to news events. In reality, markets often react in advance or with delay, depending on positioning and liquidity. Sometimes good news is already priced in before it becomes public, and sometimes the impact takes time to reflect due to broader market conditions. This delay between news and price reaction often confuses observers who expect direct and immediate movement. It becomes clearer that the real challenge is not predicting XRP in isolation, but understanding how narratives, liquidity, and psychology interact over time. In the next part, the focus will shift toward the role of regulation, institutional involvement, and why XRP's long term position is shaped more by structural financial systems than by short term market noise. The deeper you go into XRP's real market position, the more you start to notice that regulation and institutional involvement play a much bigger role than most retail traders understand. Unlike many crypto assets that are driven mainly by retail speculation, XRP has always been closely connected to financial systems, and this connection makes its price behavior more complex than simple hype cycles. When people ignore this layer, they end up treating XRP like any other trending token, and that is where many wrong conclusions begin to form. One of the key factors influencing XRP's long term outlook is regulatory clarity. In financial markets, uncertainty is often more powerful than good or bad news itself. When rules are unclear, large institutions hesitate to fully commit, even if they are interested in the technology. This hesitation slows down adoption and creates extended periods of price stagnation, not because the asset has no value, but because capital moves carefully when legal frameworks are still forming. This is why XRP discussions often feel stuck between optimism and caution, because the market is constantly waiting for clearer signals from regulators. At the same time, institutional interest in blockchain based payment solutions has been growing steadily across the global financial system. Banks and payment providers are continuously exploring ways to make cross border transactions faster cheaper and more efficient. This is where XRP's underlying purpose becomes important in the broader discussion. Instead of focusing only on short term price charts, institutions tend to evaluate utility, integration potential, and long term cost efficiency. These are slow moving decisions, but they have strong influence on future demand if adoption increases over time. However, it is also important to understand that institutional involvement does not immediately translate into price spikes. Even when partnerships, pilots, or integrations are announced, actual market impact depends on scale, usage, and regulatory approval in multiple regions. Financial systems do not change overnight, and integration into global payment infrastructure is a gradual process. This is why some people feel disappointed when positive developments do not instantly reflect in price movement, even though the underlying progress may still be meaningful. Another important layer in this discussion is the increasing attention on central bank digital currencies and modern payment systems. As governments and central banks explore digital financial infrastructure, the entire cross border payment industry is being evaluated and redesigned. In this environment, assets like XRP are often discussed in terms of efficiency and interoperability rather than speculation. This shifts the conversation from short term trading behavior to long term infrastructure potential, which again creates a gap between public expectations and institutional reality. At the same time, market participants, often misunderstand how deeply interconnected global liquidity and macroeconomic conditions are with crypto assets. XRP does not move in isolation from interest rates, dollar strength, or overall risk appetite in financial markets. When global liquidity is expanding, risk assets generally perform better. And when liquidity tightens, even strong narratives struggle to push prices higher. This macro layer is often ignored in retail discussions, but it plays a major role in determining the environment in which XRP trades. It is also worth noting that regulatory developments are not just about approval or rejection, but about defining how digital assets can legally operate within financial systems. Once clarity improves, it reduces friction for institutional participation. This does not guarantee, immediate price appreciation, but it does create conditions where long-term adoption becomes more realistic. Markets usually respond to these shifts gradually as confidence builds and capital slowly adjusts to new frameworks. When all of these factors are combined, regulation, institutional interest, and global payment modernization, it becomes clear that XRP is positioned in a very different category compared to purely speculative assets. This is why simple price predictions often fail to capture the full picture. The real movement depends on how quickly these structural elements evolve and how effectively they integrate into existing financial systems over time. As we move forward in the analysis, the focus will shift even deeper into market psychology, liquidity cycles, and why emotional trading behavior continues to create confusion around XRP's real direction, especially when short-term volatility hides the slower structural trends underneath. A major reason XRP continues to confuse so many people is because market psychology plays a much bigger role than most realize. And this psychological behavior often creates movements that look logical on the surface, but are actually driven by emotion underneath. In crypto markets, especially for assets like XRP that attract strong opinions, price is not only a reflection of value, but also a reflection of crowd behavior. And when the crowd becomes emotional, the chart starts to reflect fear, excitement, and impatience rather than stable long-term direction. This is why so many conflicting narratives appear at the same time, because different groups are reacting emotionally to the same price action in completely different ways. When liquidity enters the market, it does not move evenly or predictably. It flows in waves, and these waves create cycles of expansion and contraction that many retail traders misinterpret as random manipulation or unfair behavior. In reality, liquidity cycles are a natural part of all financial markets, and XRP is no exception. When liquidity increases, price tends to expand more easily, and when liquidity tightens, even strong assets struggle to move upward. This creates a pattern where XRP can appear extremely active at times and completely quiet at other times, leading many people to assume something unusual is happening when in fact it is just the normal rhythm of capital flow. Another important factor is how expectations build up during quiet market phases. When XRP remains stable for a long period, attention slowly increases as people start searching for reasons why it has not moved yet. During this phase, speculation often becomes stronger than actual data, and people begin creating theories to explain the lack of movement. And this is where misinformation often grows, because uncertainty creates space for imagination, and imagination spreads faster than verified analysis. As a result, many traders begin forming beliefs based on assumptions rather than confirmed developments, which increases confusion even further when price eventually moves in a different direction than expected. Market psychology also creates a strong tendency for people to enter at the wrong time. When XRP begins to rise, optimism spreads quickly, and many late buyers enter the market expecting continuous growth. However, these periods of rapid optimism are often followed by corrections, not because the asset is weak, but because early positions take profit and liquidity resets. On the other hand, when the price falls, fear dominates, and many participants exit positions at low points, even though those periods often represent areas where long-term accumulation is happening quietly. This cycle of emotional buying and selling creates a repeating pattern that looks confusing but is actually very consistent when viewed over longer time frames. It is also important to understand how narratives influence decision making. In XRP discussions, narratives often shift quickly between extreme optimism and extreme doubt. One week, the focus may be on massive adoption potential, and another week, the focus may shift to delays or uncertainty. These shifting narratives are not always based on new fundamental information, but are often driven by recent price movement. When price goes up, positive narratives gain strength, and when price goes down, negative narratives become more dominant. This feedback loop creates an environment where perception is constantly changing, even if the underlying fundamentals remain relatively stable. Liquidity cycles also interact strongly with these psychological patterns. When new capital enters the market, it often looks for momentum, and when it exits, it tends to leave quickly during uncertainty. This creates sharp movements rather than smooth transitions. XRP, like many digital assets, experiences these phases where momentum builds gradually, then accelerates rapidly, and finally slows down again as liquidity stabilizes. Each phase feels different to participants depending on when they enter, which is why opinions about XRP can vary so widely even among experienced observers. Another layer that adds to confusion is the difference between short term trading logic and long term structural analysis. Short term traders focus on immediate price reactions, while long term participants focus on broader cycles and adoption trends. When both groups share the same space, their interpretations of the same data can be completely opposite. A small drop might look like a breakdown to one group, while it looks like a normal pullback within a larger structure to another group. This difference in perspective creates ongoing debate and disagreement about what XRP is actually doing. It becomes clearer that XRP price behavior is not controlled by a single factor, but by a combination of liquidity movement, emotional reaction, and evolving market structure. In the next and final part, the focus will bring everything together into a complete view of why XRP price expectations are often misunderstood and what a more balanced perspective looks like when all major forces are considered together. At this point, when all the major factors are combined together, it becomes clear why so many people are wrong or partially wrong about XRP's price expectations. The main issue is not that people lack information, but that they often focus on only one part of the market while ignoring the rest. Some focus only on hype, some focus only on fear, and some focus only on long term potential without understanding short term behavior. In reality, XRP price it is shaped by a mix of structural forces, liquidity cycles, regulatory progress, institutional interest, and market psychology all working together at the same time. One of the most important conclusions is that XRP does not move in isolation from the global financial environment. Even if the technology or adoption narrative is strong, price movement still depends heavily on overall market liquidity and investor risk appetite. When global conditions are supportive, capital flows more freely into risk assets, and when conditions are restrictive, even strong narratives struggle to produce sustained upward movement. This is why XRP can sometimes appear slow or disconnected from expectations, even when long term developments are progressing in the background. Another key point is that expectations in crypto are often shaped by emotion rather than structured analysis. When people see exciting predictions, they tend to believe in extreme outcomes without considering probability or conditions required for those outcomes. On the other side, when price remains stagnant or drops, pessimism spreads just as quickly. This constant, emotional shift creates a cycle where perception of XRP changes far faster than its actual fundamentals. Over time, this leads to confusion, frustration, and conflicting beliefs about what is really happening.